Greetings, my beloved clients and friends. It's the 1 year anniversary of the GameStop story. And so I wanted to retell that story because at the time I sent out a newsletter to my clients, but I never sent a video. And one of the reasons I sent a newsletter is that we had gotten out like right at the very peak, right? And at that time, during that whole week with the GameStop frenzy, there was a ton of trading activity and the short squeeze was going on and there was a lot of scrutiny over those trades. And so I got a call from Pershing in New York, like, why'd you place that huge trade in GameStop? And so I had to explain myself. And so this was the newsletter that I sent to explain myself to my institutional broker Pershing, and then also I shared it with my clients. So I want to read that to you guys. So it says this: what is going on with GameStop? And I sent this out on January 29th, exactly a year ago today, because we had sold out of the position January 28th, which is when it had peaked. So here's what it said: what is going on with GameStop? I am writing this letter to assure you, my beloved clients, that I am not speculating with your money. GameStop has been in the news recently because of its meteoric rise and the wild speculation surrounding it. I have recently purchased and sold the stock. It is not because I was speculating on the short-term gyrations in the stock price, but rather because it hit my long-term price target much sooner than expected. I started buying GameStop on September 22nd, 2020 at $10.60 when I learned that Ryan Cohen had acquired a 10% position in the company. Cohen is the founder of Chewy, the online pet supplies retailer. Cohen is a retail e-commerce genius. He had phenomenal success with Chewy, which he sold to PetSmart for $3.3 billion in 2017. He believed that GameStop had the potential to be a major player in the global gaming market if they could pivot from brick and mortar to retail e-commerce. I believed Ryan Cohen was the perfect person to turn around GameStop if he could just convince the board. Here is my investment thesis for going into GameStop. GameStop was a company that had consistently generated annual revenue of $8 to $9 billion, although it fell off quite a bit in 2020. The company had management problems. They had gone through 5 different CEOs in the past 3 years. They were holding doggedly to a brick and mortar retail strategy with physical games at a time when the market was clearly moving to online retail and online gaming. The stock had tumbled from a high of $57.21 in 2013 to a low of $2.57 in 2020. Market sentiment was that the company was on the verge of bankruptcy, that they were the next Blockbuster Video, and it was priced as such. When I bought the stock, it was trading at a market capitalization of $690 million, which was just 0.11 times sales, an incredibly low valuation. GameStop represented the textbook definition of a typical activist target. They looked like the ideal candidate for an activist investor to come in, buy a large stake in the company, shake up the board, and realize a handsome profit in a short period. Here is a quote from my CFA textbook. Target companies feature slower revenue and earnings growth than the market, suffer negative share price momentum, and have weaker than average corporate governance. Traditionally, the target companies have been small and medium-sized listed stocks. GameStop checked all the boxes. Ryan Cohen was the perfect activist investor to shake up GameStop and drive the stock price up significantly. I figured if Ryan Cohen, with his online retail acumen, could help the company pivot and develop a strong online retail platform, GameStop could turn around their declining sales numbers, if they could grow revenue by maybe 20% per year over the next couple years, they could get annual revenue up to $10 billion and growing. If Wall Street recognized the turnaround in progress, the stock could trade conservatively at 1.5 times sales. 10 billion in sales times 1.5 would be a market cap of $15 billion. That would be a 20x return from where I bought it. Even if sales only got back up to 8 billion and they were trading at 1 time sales, that would be a market cap of 8 billion, which would be an 11x return. The question was, could Ryan Cohen get GameStop's leadership to change direction? Cohen's 10% position in the company bought him an audience with the board, but informal talks during the third quarter of 2020 had little effect. Then, on November 16, 2020, Ryan Cohen published an open letter to the GameStop board of directors entitled Maximizing Shareholder Value by Becoming the Ultimate Destination for Gamers. It was a scathing critique of management as well as a point-by-point plan for turning the company around. See attached. The board offered Cohen a board seat. He turned it down. They offered him 2 board seats. He turned them down. In the meantime, Cohen had acquired more shares, raising his ownership stake to 13%. On January 11, 2021, GameStop announced that they had given Ryan Cohen 3 board seats on the 9-member board of directors. See attached. The 3 new board members would be Ryan Cohen, Alan Atal, the former chief marketing officer at Chewy, and Jim Grube, the former chief financial officer at Chewy. This was the turning point. I was hoping GameStop's management would listen to Ryan Cohen, and this move proved that they were on board in a big way. Personnel changes matter. When the Los Angeles Lakers signed LeBron James and Anthony Davis, they went from a last place embarrassment to the NBA World Champions in 2 years. When GameStop gave 3 board seats to Ryan Cohen, they went from a company on the verge of bankruptcy to a soon-to-be online retailing behemoth. I cannot emphasize this enough. GameStop fundamentally changed on January 11, 2021. The media and Wall Street is not picking this up. They're giving all the credit to the short squeeze and the Reddit traders, which only added fuel to the fire and drove the stock up faster and farther than I would have imagined. But GameStop arguably became 10 times more valuable on January 11th, 2021. If you do not believe me that Ryan Cohen is the LeBron James of online retail, watch this short video attached. He brought his dream team with him, and they are just getting started. What happens next? The increased stock price and corresponding market capitalization affords GameStop the opportunity to go to the capital markets and issue equity to raise capital. I expect them to announce a capital raise in the near future, which they did. With a fresh infusion of capital, they can shore up their balance sheets, pay off debt, and have the cash on hand they need to fund their expansion projects. Next, I expect GameStop to make a public announcement of their revised corporate strategy, including a detailed turnaround plan. I expect they will also be announcing personnel changes, which they have. Ryan Cohen will clean house and build out his dream team. What was my response to this incredible news? I bought more shares on January 13. Fortunately, I had some cash available in the accounts from recent trimming of the Tesla position. I had expected the stock to pop on the news. I also expected the pop to be exacerbated by the fact that GameStop was so heavily shorted. I believe it was the most heavily shorted stock on the NYSE, but I didn't expect it to go up so far, so fast. I had not anticipated that the Reddit rebellion would put rocket boosters on this stock. I trimmed the position at $95 only days after buying it in the mid to upper 30s. I thought it might have been the short squeeze I was anticipating. I trimmed again at $295 when the stock blew past my internal price target of $200. And yesterday, I sold out the position at $400 because speculative fever had taken over the market for this stock, and I did not want to be speculating with my clients' money. For clients with taxable accounts, you're going to have a huge short-term taxable gain. Sorry, not sorry. I cannot apologize for growing your money. Net of taxes, it is still a handsome gain. What are my plans going forward? With Ryan Cohen on board, I really like the long-term prospects for this company. Unfortunately, the stock price has gotten way ahead of itself currently. When the headlines die down, if the stock price returns to a reasonable valuation, I could see myself buying this stock again as a long-term hold. I don't think it would be redundant to close this letter quoting Justice Samuel Putnam again. The Prudent Man Rule. All that can be required of a trustee to invest is that he shall conduct himself faithfully and exercise a sound discretion. He's to observe how men of prudence, discretion, and intelligence manage their own affairs, not in regard to speculation, but in regard to the permanent disposition of their funds, considering the probable income as well as the probable safety of the capital to be invested. I strongly encourage you to read the two accompanying documents, Ryan Cohen's letter to the Gamestop Board of Directors and the board's announcement of their director changes, and to watch the short video interview of Ryan Cohen to get a better understanding of the fundamental developments behind GameStop's sudden rise, not just the hype. You will notice I am not participating in any of the other short squeezes currently taking Wall Street by storm, because I am not aware of any fundamental developments to justify the price movements. As always, I welcome any questions or further discussion on any topics discussed in this newsletter. Also, please feel free to share this newsletter with any friends or associates that are interested in investing. Sincerely, Jonathan Lopez, President, Platinum Wealth Manager. So that was a year ago, and sure enough, the stock dropped way off. I think within a week, around the first week of February, we started buying it again at 90. We bought some more at 59. We were able to get out a few months later at half of that position at 340. And then I think in June, we closed it out at 300. And so interestingly, a year later, GameStop has lost a lot of its sizzle, and the price is getting kind of close, or we're kind of looking at it again. So that may not be our last foray in GameStop, because as I said in the news, I really like Ryan Cohen, his vision for online retail in general, and his business acumen and the leadership team he's building there. So we haven't bought back into it yet, but don't be surprised if we dip our toe back in. All right, have a great weekend.